Good afternoon. Thank you so much for joining us. I'm Erika Anderson. I'm a research analyst with GEFI, and with me is David Chollet of Accuracy. Thanks for joining me, David.
Thank you, Erika. Good evening, everyone.
So, really quick, I'd love to do a bit of an introduction so that people will understand a bit better about your expertise in this area. Would you mind telling me a bit about your background?
Yes, sure. So I'm David Chollet, partner at Accuracy. Accuracy is a financial and strategic advisory firm. Let's say before joining Accuracy, I spent less than 20 years in the banking industry, and I'm now one of the partners leading the financial sector activity for our company.
Very interesting. Accuracy has actually just provided a guest blog for GEFI, which is a fascinating read if you get a chance to get over to check it out. So, if you don't mind me diving right in, because we have some really fascinating questions lined up for today. So, the article mentions the popularity of sustainable financing instruments like green bonds and sustainability linked loans. It also cites a particularly interesting statistic that global sustainable bond issues could reach 880 billion euros in 2023, which is an increase of over 30% from 2022, of which 59% could be dedicated to green bonds. How do these instruments work, and what benefits do they offer to both investors and the environment?
Yes, sure. Okay. Let me just describe how it works and let's say what was the evolution of this market. I would say that beside traditional investment vehicles that incorporate ESG criteria, we can find this category of securities that is entirely dedicated to sustainable finance. It corresponds to specific sustainable debt instruments. The two famous assets, I would say, are the green bonds and the social bonds, which represents more widely 70 to 75% of these specific securities. But the list of sustainable financing instruments is much longer. We could find some sustainable bonds, let's say transition bonds, sustainable linked bonds, green loans, green notes, green ABCP, anyway, any kind of financing, short-term financing, middle and long-term financing that we usually see on the global market. Saying that, and just to provide some key figures, end of 22, the cumulative issuance of green, social, and sustainability bonds were close to $4 trillion. It's huge, but I would say we're expecting more. And as you said, accordingly to the Bloomberg consensus, issuance of green and sustainable bonds could reach, let's say, around 900 million end of 23, meaning an increase of more than 30% over 22. Quite impressive. And coming to your question, how these products work. Let's start with the green bond, the main one in the market. As I said, represents 60% of the issuance. Green bonds are fixed income securities, let's say classic bonds, which finance investments with an environmental objective. They differentiate from regular bonds because they are labeled green by issuers or external third-party entities, and there is a commitment to use the funds for financing green projects. However, it's important to mention that there is no legally binding definition of a green bond. Most of market players have then adopted the definition of the GBP framework. GBP means Green Bonds Principles. And just to clarify, Erika, green bonds are, if we follow strictly the definition of the GBP framework, green bonds are any type of bond instrument where the proceeds were aligned with, let's say, four components. The four components are the use of the proceeds, process for project evaluation and selection, management of proceeds, and finally reporting. So most important thing is to have, let's say, some transparency under this product. And just to complete the picture, we have green bonds. I mentioned the social bond, which represent, let's say, around 20% of the market. It's similar to the green bond. This product started in 2010, let's say more widely in the European market, with the objective to finance some specific situation under economical depressed. The objective of this social bond was at the beginning to refinance part of this social housing project. And exactly and similar as the green bonds framework, we have also a social bonds framework, SBF. And similarly to the previous definition, the objective is for this framework is to clarify the let's say the 4 items that I mentioned previously, meaning the use of the proceeds, the transparency with evaluation of selection of projects, management of proceeds, as I said, and also the report. And at the end, to have the full picture, you may find some sustainability bonds, which is finally a mix, let's say the combination of both green bonds requirement and social requirements. So let's say it's the addition of the previous framework, GBP and SBP.
That's fascinating. So you gave an interesting example of a social bond in the social housing. Could you give me an example of a green bond and a sustainable bond? Like a green bond, what kind of project it would focus on?
Let's say today, a large part of projects for which we have some specific involvement in terms of reduction of GHG could be labeled as a green bond. We have seen so many projects, and specifically, I would say in the energy sector, for which the objective is to finance the transition of such company. Specifically, for instance, in many photovoltaic projects, you can get some green bonds financing with, let's say, some specific objective, which is to reduce your GHG footprint. Saying that, as you can imagine, one of the underlying objective, is to be able to assess and to measure the different governance that you may have under this financing.
Absolutely. So you had mentioned earlier a couple times, you brought up the concept of transparency. And there has been some recent concern about sustainability linked financial instruments being used in fossil fuel projects. Is there a lot of concern about greenwashing right now?
I'd say it's a very good question. And once again, for me, it's a demonstration that we need more regulation. I wouldn't say that we need, let's say, or I wouldn't say that everything has to be regulated. It's not my point. But as I said previously, in the fourth requirement that we have in the different frameworks, which are the green one or the social one, we can see that transparency is one of the key words. This is the reason why we need some more regulation. As I said, a large part of investors follows the GBP or SBP framework. But in terms of figures, what does it mean? According to IFC, these principles are endorsed by 95% of issuers, meaning that 95% is not 100%. So going back to your question, it could happen some situations for which there is a lack of transparency, for which we could have some, let's say, misunderstanding of the project, misunderstanding about the ESG metric. This is the reason why I think it's important that this framework has to be applied by all the market players. And in the same time, because you mentioned the fossil fuel-based project, in the same time, oil and gas sector might need support. Some experts argue that investment in carbon-intensive companies with plans to transition is in fact more important than excluding them altogether. Some of the world's largest owners of fossil fuel assets are large, diversified companies, but also developing renewable energy assets. So finally, just to this question, I think the most improve, not to say regulate, but we must improve the transparency to avoid such questions and greenwashing.
I think just to pick up on one of your later points, I think we could do an entire major video on engagement versus divestment in its own right.
Definitely.
Yeah. But right now, we are going to take a brief break to hear from our GEFI COO, Omar Sheikh, regarding the upcoming Ethical Finance Global 2023 and SDG Hive.
From the politicization of ESG to the increase in litigation and the tension points now emerging between the E, the S and the G. Come join us on the 20th of September in Edinburgh to discuss ESG emergency, from promises to solutions.
We are looking forward to a very interesting event in September.
Agree.
I would like to continue our conversation a little bit, focusing on more of the environmental issues. So you discussed the transition in your article from fossil fuels to renewable energy sources in some of the hydrocarbon reliant economies, citing cases where renewable energy is proving to be more profitable than oil. What challenges do these economies face in accelerating this transition? And how can the financial sector, in particular, best support them?
To start, I would say first that economies traditionally reliant on hydrocarbons, like GCC region, for instance, are exploring renewable energy for energy mix diversification. It's important to say that early adopters in GCC, since early, let's say, 2000s, have demonstrated economic viability of renewable energy. Let me take an example. We have a recent photovoltaic project in GCC showcase exceptionally low cost of electricity. We know a project named Schwaba, it's a solar project, which reported an electricity cost of only, let's say, 1 cent per kilowatt hour, instead of a range of 3 to 10 cents per kilowatt hour. So you can, with this kind of project, decrease by 3 times the cost of electricity. So definitely, we have some projects who demonstrate the relevance of this transition. You also mentioned, let's say, the different challenges that we could face off. I would like to highlight perhaps 3 main challenges. Obviously, in these hydrocarbon-reliant economies, they have still substantial oil reserves. And we may naturally wonder if that will affect their motivation to accelerate the transition. It's, let's say, unstable. So this is something that we have to follow specifically. In some economies, we also might lack the necessary technology and expertise to develop and manage renewable energy projects effectively. So we have to be sure that, let's say, this technology is understood by everybody and we can propose to the different countries this new innovation. And finally, let's say the last challenge that we can highlight is shifting to renewable energy requires, as you can imagine, substantial investment. Substantial investment in new infrastructure, meaning that we need investors. We need to find financing to succeed this transition, to succeed this transformation.
So, I suppose going back to an earlier point that we had discussed on green, social, and sustainability, for a project that focused or that provided lower cost electricity, would that fall more into a sustainability project because it has the social as well as the environmental element?
So it means that at the end, we have demonstrated the economic pertinence of such project. You will have an impact for the people, I would say, on the asset side of the project, but you may have also some impact on the liability side of the project.
Interesting.
And just perhaps a comment coming back, let's say, the product that we can see on the market. I would say that before the pandemic, before COVID, it's important to mention that this product issued on the market had a higher pricing. You had to pay previously what we call a greenium. Okay, so naturally, for the people expecting to, let's say, optimize their cost of funding, they unfortunately do not necessarily decide to issue a green bond. Now things have changed. Since pandemic, we can now observe a difference of pricing, a difference of spread in the advantage of the green bond issuers. Meaning that today, due to the fact that we have more liquidity on the market for this product, fortunately, you can decrease your cost of funding for this project. So let's say we're in the good trend.
Oh, that's good to hear. We do have a really interesting question that just came through from Sam. Is there a way to transition or repurpose some of the physical hydrocarbon infrastructure in hydrocarbon dominant economies so that it supports renewables? And how might this be financed? It's an interesting one. It seems a bit like a case-by-case situation.
Yeah, definitely. Definitely. This is what I think. I would say that I'm just thinking about, let's say, the option. It's also a technical question, I would say, in terms of answer. So I was just thinking about the different project in such situation when, let's say, we have used the previous infrastructure. I have not specifically project in mind, but I'm sure that this is something which is manageable. And in terms of financing, at the end, it's always an assessment about, let's say, the what we call the capex, so the investment that we have to do, and also a trade-off with, let's say, the global economy of the project. So again, it's a trade-off between capex and opex. So the expenses that you may have, the expenditure that you may have in such project, and at the end, the assessment of the funding needs. So sorry to not be so clear, Sam, in your question, because I have no specific, let's say, project in mind.
Okay. No, that's perfectly fine. So really quick, Accuracy is a part of GEFI's Path to COP28 campaign. To what extent do you see some of the topics that we've discussed today coming up at COP? And how do you think they'll be resolved?
Maybe we can start by saying that COP28 will happen in one of the most hydrocarbon-reliant economy. So it means that there is a very high expectations from the sector energy to accelerate energy transition. As I said previously, we have now products, green bonds, sustainable bonds, let's say more widely sustainable financing. We have some framework, not necessarily in the entire world. As of today, we have taxonomy in Europe. We know that in other areas, there is some thinking about new taxonomy, or let's say specific framework, more local frameworks. We have also more and more investors. I mentioned, and we mentioned, and you indicate, Erika, the expected issuance for 2023. So now we have to manage this transition. And coming back to your question, Dr. Al-Jaber, CEO of ADNOC and president of the COP28, calls for COP of action. Even if sustainable finance is becoming more and more significant and a priority for a large part of lenders and investors, the challenge, or let's say the challenges of climate change are bigger and require accelerating. So we hope that this COP28 will be this acceleration vector, definitely.
Fantastic. Do you have any other hopes for COP28? Anything in particular?
Yep, I would expect that all the economic agents, all the decision makers of this world will be present to straighten this priority transition. We need a large echo following the COP28. The question is not, let's say, the event of the COP28, but what will happen after.
That's a fantastic point. Well, thank you so much for taking the time to speak to me today. We will have a link to your fantastic article underneath, as well as links to information on the Ethical Finance Global 2023 and SDG Hive. And thank you all for joining in. I hope you all have a great day. Thank you.
Thank you, Erika.